Hello everyone, my name is Drew Kolz and I am currently a junior at Marquette University. I am a domestic industrial analyst for Marquette's Applied Investment Management program, and today I am going to be presenting the stock Columbus McKinnon Corporation with a ticker of CMCO. To begin, Columbus McKinnon Corporation is an industrial company that focuses on the design, manufacture, and marketing of material handling products and services. The company operates worldwide and currently holds over 1,400 different customers. The products being produced by CMCO serve a wide variety of purposes within the material handling industry, while CMCO identifies three main product categories known as engineered products, industrial products, and crane solutions. Each category has multiple unique products. The company was founded in 1875 and had its initial public offering in 1996. On the right, there are some key metrics about the stock and a chart of its one-year history. It is recommended that the AIM Equity Fund purchase shares in Columbus McKinnon Corporation at $53.63, with a price target of $64.47, representing a 20.22% potential upside. The reasoning behind this recommendation starts with the fact that despite Columbus being negatively affected from the economic downturn caused by COVID-19, the company produced solid margins on lower volume. To add to this, with the acquisition of Donor Manufacturing Company, CMCO expects to see incremental revenues. Furthermore, with a new strategic plan called the 80/20 process, the company continues to simplify the business, reduce expenses, and increase margins. Finally, the company is well established in the industry already, with 5 different material handling product categories being market leaders. CMCO recently announced that they have reached a definitive agreement to acquire Donor Manufacturing Company for $485 million by the first quarter of fiscal year 2022. With Donor Manufacturing being the leading producer of high-precision conveyor automation platforms, CMCO will be further diversifying its revenue base and entering into an attractive growth market. In addition to this, management expects $5 million of annual cost savings over the next 2 years, accompanied by a 5-cent to 10-cent EPS increase. With a business model that produces more than double EBITDA margin at 25% compared to CMCO's 12%, Columbus expects Dorner to provide over $100 million in revenue by 2022. Following former CEO Mark Morelli's vision that was announced in 2018, the 80/20 process has already started to produce as planned. Through product, customer, and overall segment simplification of the business, the company continues to see greater results on greater efficiency. With more than $35 million of incremental operating income created since fiscal year 19, and with the company expecting to create more than $60 million by 2022, the 80/20 process should continue to drive the company forward. Furthermore, CMCO is well positioned to flourish with increased operating income and growing margins. Not to mention, as these margins are paired with the company's 7.38% CAGR of free cash flow over the next 5 years, there remains ample opportunity for further capital investments and bolt-on acquisitions. Currently, CMCO holds the largest market share in the United States for the following product categories: hoists, lifting and sling chain, forge attachments, actuators, and digital power and motion control systems. Despite the dominance in the homeland, management is still not satisfied. With strategic plans to increase R&D at an annual growth rate of 2.77% in the next 5 years, management predicts their market share percentage for each listed category to be over 50% by 2022. Furthermore, with increased development into CMCO's online customer experience, management expects growth in their smart hoist technologies and a capitalization of the new automotive technology trend. An intrinsic value for CMCO was reached by completing a 6-year DCF. With a terminal growth rate of 2% and a WACC of 7.55%, an intrinsic value of $64.47 was reached. A sensitivity analysis of plus minus 50 basis points on the terminal growth rate and plus minus 100 basis points on the discount rate resulted in a range of $48.77 to $82.03. Additionally, a price-to-book valuation was conducted. Using a peer average multiple of 2.95, a relative value of $60.98 was reached. Finally, an EV to EBITDA valuation produced a peer average multiple of 20.54 and a relative valuation of $67.96. By weighting these three methods 60-20-20, a price target of $64.47 was reached, resulting in a 20.22% potential upside. Next, we have CMCO's investment risks. Given that the material handling industry is highly cyclical, the company can be adversely affected by changing conditions in the economy. Second, it is important that CMCO continues to develop and improve products that will generate future value for the company. If not, they risk losing revenues to competitors. Finally, with 45% of net sales being driven from non-US markets in fiscal year 20, CMCO is subject to numerous international risks, including currency exchanges, trade barriers, and tariffs. While the leadership team at CMCO appears to be relatively short-tenured, it is full of individuals with years of prior experience in the industry. Headlining the company's leadership team is David Wilson, who was recently appointed President and CEO in June of 2020. The VP of Finance and CFO of the company is Gregory Rustowich. He holds over 10 years with the company. The longest tenured member of the team is Kurt Wozniak, who holds over 22 years as the VP of Industrial Products. Next, we have Bert Brandt and Apol Chintapalio, who serve as the VP of Global Manufacturing and VP of Engineered Products, respectively. Mr. Brandt has been with the company for 3 years, and Mr. Chintapalio 2. To conclude, Columbus McKinnon Corporation is poised to take great advantage of the material handling industry as the world reopens. Behind increased margins and a new company acquisition, this opportunity is one that should not be passed on by Marquette University's Applied Investment Management Equity Fund. Thank you for all taking the time to watch my presentation, and if you have questions, please do not hesitate to ask. My email is drew.kolz@marquette.edu, and I will also actively respond on the D2L discussion board. Thanks again.